Should Elon Musk be successful in cutting down on accidents by half as compared to human drivers, shouldn't auto insurance prices decrease as a result of the lower underwriting risk? This might have a negative effect on Geico's earnings, float, and possibly even its margins. Let's use an extreme example. Suppose that, for some bizarre reason, there are just 3 accidents in the United States the following year. Costs will always decrease with fewer accidents, but this has proven to be more difficult to accomplish than anticipated. However, if that truly happens, the stats and our data will indicate it, and the prices will fall down. Welcome back, everyone. Today, we're exploring the recent seismic remarks made by none other than the titan of the financial world, Warren Buffett. His startling words about Tesla have left the globe dumbfounded and could imply something significant for the future of the stock. Let's go into the unexpectedly intriguing world of insurance. Yes, you heard right. Insurance can be a thrill ride, especially when titans like Elon Musk and Warren Buffett are in the driver's seat, talking about Tesla's self-driving innovation and its societal ripple effects. Imagine this. The Oracle of Omaha and investment expert Warren Buffett recently wondered what would happen to auto insurance in a world where Tesla's self-driving technology rules the road. He believes that while Tesla's driverless cars cut accidents by an astounding 50%, it will be a huge benefit to public safety, but a major setback for insurance firms. The insurance industry's volume is declining as fewer crashes result in a decreased need for insurance. In keeping with his usual astute style, Buffett concedes that what's terrible for insurance may actually be good for society. Then, out of the blue, Elon Musk tweets that Buffett might want to buy some Tesla stock to hedge his bets. Classic Elon, converting a difficult argument into a stock recommendation. But let's not forget the past disasters when behemoths like GM and Uber tried to enter into the insurance business and got their financial wires tangled before you go calling your broker. Mispricing risks turned their insurance fantasies into horrific losses. Turning back to Tesla, they are gathering data like a squirrel gathering nuts for the winter, in addition to constructing automobiles. They monitor everything, even your speed and the timing of your brakes in response to that same squirrel darting across the road. Insurance appears simpler than it actually is. It's quite enjoyable as you receive the money up front and discover later on whether you made a mistake. A 50% reduction in accidents would be detrimental to insurance company volumes, but beneficial to society overall. But what we're aiming for is beneficial to society. With all this juicy data, Tesla imagines a future in which your car, when combined with their self-driving technology, not only avoids squirrels but also lowers your insurance costs. Everyone may benefit from cheaper prices and a cozier ride as a result. For conventional insurance executives, though perhaps not so cozy, they would start perspiring more than a long-tailed cat in a room full of rocking chairs. What then lies ahead? Less accidents and smarter automobiles may cause a revolution in the insurance sector, which might have a significant impact on existing insurers. However, as Buffett notes, making the shift to this future won't happen quickly. Tesla will need some time to accumulate enough kilometers and data in order to refine their technology. As you can see, and as you most likely already know, Tesla designs its cars. These are not your average automobiles. Instead, they are constructed with autonomy in mind and are engineered to reduce the likelihood that you will exchange paint jobs with other drivers. Once autonomy is employed as the primary means of propulsion for the vehicle, the likelihood that you will be the cause of an accident will be significantly decreased. That's really recent for Tesla, by the way. The miles driven weren't rising at the rate that Tesla desired prior to version 12. Version 12 has shown us that hockey stick growth is occurring, and the free trial is undoubtedly contributing to it. Tesla's improved car performance and lower chance of collisions are leading us to a safer future. It's possible that Warren Buffett is considering how these developments might affect his own business while he watches from the sidelines. After all, the market for traditional auto insurance declines along with the number of incidents. Buffett should consider hedging his bets in light of these technological disruptions. In relation to Tesla, I want to emphasize that there are less accidents as a result of their technology, and this is something that can be verified. However, I believe that the rising cost of accident repairs must also be taken into account. Therefore, I'm not sure that the overall number has decreased as much as Tesla would like us to think if you multiplied the number of accidents by the cost of each accident. On the path to an autonomous nirvana, though, it's not all smooth sailing. Although fewer accidents are occurring because to Tesla's technology, the handful that do occur typically cost more to repair. You might wonder, why? Because the complex equipment that powers these high-tech chariots is expensive. Thus, even if the number of fender benders is declining, the financial impact of each one is increasing. The financial savings from fewer accidents that we hope to observe may be somewhat offset by this. This is where the intriguing part really begins. Not content to stop at producing automobiles, Tesla may be preparing a direct challenge to the insurance sector. In a perfect world, your insurance would be provided by your car's manufacturer. By offloading some of the insurance responsibilities to the equipment provider, Tesla's entry into the insurance market may have far-reaching implications beyond simply providing coverage for repairs. It has the potential to completely transform the way that obligations are assigned between automakers and their customers. Indeed, Tesla is altering the game in that way. It's evident from this changing environment that Tesla is blazing a trail that could eventually lead to a new paradigm for automotive economics. Conventional insurers may have to reassess their plans or run the risk of being overtaken by electric vehicle enthusiasts. Now fast forward to the inside look at the mechanics of Tesla's vehicles, which are not only aesthetically pleasing, but also economically friendly. Tesla has switched to a more modular architecture for its self-driving processors and componentry when it comes to maintenance. This implies that we have tidy, interchangeable modules under the hood rather than a tangled mess. It turns out that fixing these expensive high-tech components isn't as expensive as we had anticipated. Therefore, you could be pleasantly surprised if you assumed that fixing a Tesla would cost an arm and a leg, not to mention your firstborn kid. Let's run some numbers now. Reducing the frequency of repairs is what actually lowers overall costs, even when the cost of individual repairs may not rise as originally anticipated. With fewer collisions caused by more intelligent driving technology, the overall cost of repairs may eventually go down. This is a victory lap for sustainability and safety, not simply for your pocketbook. Therefore, it took more than 3 years to reach 1 billion FSD miles. Less than 3 months will pass before reaching 2 billion miles. We'll see whether the question of how many billions of miles are driven worldwide at this time keeps rising. It appears to have gone up. Compute is rapidly expanding. We're getting close to breaking free. Then he claimed that as of right now, this is averting 7 crashes daily. The current state of this supervised FSD is 7 crashes per day. This comprises 4 crashes every day when FSD was turned on, subtracted from the 11 anticipated human crashes that were avoided. According to Sawyer, that equates to 15 million kilometers every day, or 1.35 genuine life saved every week. Whoa! I think this analysis they just done is fantastic, and I really hope it's accurate. It's possible that one person's life is saved every week by using only FSD, supervised FSD, and beta testers. In light of safety, let's discuss benchmarks. Not only is Tesla's completely autonomous program saving lives, but it's also clocking up miles. With more than 1.5 billion miles driven and on course for 2 billion, Tesla's FSD technology is averaging 7 crash-free days per day. You did really hear correctly. Artificial intelligence saves 7 potential metal crumples every day. The worst part is that statistical research indicates that this marvel of contemporary technology may be saving 1 life per week. Take a moment to process that while you enjoy your morning coffee. It's possible that Tesla's FSD is saving the day. However, the Tesla adventure is far from over. It's even more fascinating because every day brings new and intriguing discoveries with ups and downs. Tesla continues to draw investors into its rabbit hole for this reason. But who else is as optimistic about Tesla as you are? That would be Seeking Alpha, our sponsor for today. It's not enough to merely watch Tesla's phenomenal rise from the sidelines. Seeking Alpha is your one-stop shop for the most recent information on Tesla, Tesla stock price targets, Tesla innovation, and everything Elon Musk related for fans of the company and those who have an eye for finding the next big stock market find. Ignore the lamestream media's anti-Tesla rhetoric. The internet's top pro-Tesla news outlet is seeking alpha. Our channel might receive a commission if you click on the affiliate links in the description and make a purchase. I appreciate your help. With driving automation, we're making a significant shift towards the future. It is not merely conceivable, it is unavoidable. It's not like robots are going to take your driving wheel tomorrow, so don't worry. Developing a clear resolution strategy and optimizing the cost structure are key steps on the road to fully automated driving. Tesla cars are becoming smarter with every software update, much like a good wine that gets better with age. Only in this case, the wine is software and doesn't come with a cork. Imagine sleeping with a car that updates itself to drive safer and smarter. That's the future Tesla is aiming for. Substantial enhancements are not only predicted, but are already planned for the upcoming releases because to the vehicle's continuous increases in intelligence and computing capabilities. Thus, think again if you believed that your car was only a means of transportation from point A to point B. It is going to turn into a mobile brain. Elon actually made a comment regarding whether or not Warren Buffett need to purchase Tesla stock. Approximately all of the approximately 160 comments that I believe were left indicated, no, Buffett is not going to invest. I feel differently about this. Now let's examine how this all began. Come on, Warren Buffett, sell all your Apple and buy Tesla, is what G is saying because he began selling Apple. It appears like Buffett is attempting to accumulate cash because he may be concerned about future events. I don't see anything that's worth buying right now, he replies, sounding a little scared. Elon then declared he ought to invest in Tesla. It's a clear step. Let's now change our focus and discuss a possible narrative twist in the financial industry. The Oracle of Omaha himself, Warren Buffett, has received a recommendation from Elon Musk, the maestro of contemporary technology. Elon suggests that Warren might think about investing in Tesla, not just for laughs, but also as a calculated risk management move against his interests in oil and gas. With the globe moving toward electric cars and renewable energy, this might be Warren's secret to keeping ahead of the investing curve. Elon's pitch makes reference to Tesla's robotaxi and fully autonomous driving capabilities, which go beyond simply showcasing cutting-edge technology to fundamentally alter the energy industry. Imagine a future in which your car serves a dual purpose for you and the environment by transporting people while you're not using it. Musk believes that's a future worth investing in. As you can see, Apple recently completed a $10 billion buyback, the largest in corporate history. So all that appeals to Buffett. He might start a hedge, but he won't go all the way in one direction or the other. That's also how you would begin, by starting with a smaller portion of your portfolio. As previously mentioned, these things might decline at a sensible slope, but they won't turn off like a light switch overnight. Thus, in the insurance industry, of course, and then in a few other areas related to energy and oil and gas.